Take the exact same house. Same 3 bedrooms, same square footage, same roof, same year built. Put it in Sumter County, in the middle of Florida, and the average homeowner's insurance bill runs about $1,620 a year. Now pick that identical house up and set it down in the Florida Keys. The same house, the same coverage, now costs somewhere in the neighborhood of $14,850 a year. 9 times the price, same state, same house. Nothing changed except the ground underneath it. And right now, every headline in Florida is telling you the insurance crisis is finally easing. Those headlines are not wrong. Citizens Property Insurance, the state-backed insurer, cut its rates by an average of 8.7%. Private carriers, including State Farm, Progressive, and others, have filed decreases of roughly 7 to 10%. 18 new insurance companies have entered the state since the reforms. That relief is real, it is measurable, and I am not going to pretend otherwise. But here is what every one of those headlines misses. Rates fall. Distance from saltwater does not move. A percentage cut is applied to whatever your bill already was, which means a cut of 8% on a $14,000 premium still leaves you paying more than $12,000. And a cut of 8% on a $1,600 premium leaves you paying about $1,500. The relief does not close the gap between those two homes, it preserves it. The geography was always the price, and the geography is not going anywhere. And the size of that gap is genuinely hard to believe until you see it laid out. Florida carries the most expensive homeowners insurance in America, with statewide averages that industry trackers put in the many thousands of dollars, well over double, and in some measures nearly triple the national average. But a statewide average is a lie of arithmetic. It blends a Keys homeowner paying a fortune with an inland retiree paying almost nothing, and produces a number that describes neither of them. Nobody actually pays the average, you pay your geography. So today, I am going to count down 6 Florida towns where the insurance is still genuinely cheap, where the county average sits under $2,000 a year, and show you exactly why. This is not a warning video. This is the opposite. This is the map of where the math still works in Florida, and by the end, you will understand the single rule that decides whether your insurance bill is a rounding error or a second mortgage. Let us count them down. First, understand the villain. Because there is only one, and it explains everything else. It is not litigation, and it is not the storms themselves exactly. It is coastal proximity. Here is the mechanism. The largest single component of a Florida homeowner's premium is the windstorm portion, the part of your bill that covers hurricane-force wind. On a coastal home, that windstorm piece is not a small line item. Depending on the property and the carrier, industry analyses put it anywhere from roughly a third to well over half of the entire premium. And near the water, it is consistently the biggest slice of the bill. And that windstorm number is driven by something an insurance company cannot negotiate with: distance from open water. The closer your home sits to the Gulf or the Atlantic, the higher the modeled wind speeds, the greater the exposure, and the more the insurer must pay to reinsure that risk. That cost gets passed to you. Move inland, and the modeled wind exposure drops away fast. Which is why a home 5 blocks from the ocean in Fort Lauderdale can cost roughly 3 times what the same house costs 8 miles inland in Plantation. Same county, same weather report, utterly different bill. That is the whole story. Not politics, not luck, not a special deal, just physics and a map. And these 6 towns sit on the right side of it. And this is why the reforms, real as they are, could never equalize the state. Lawmakers can reduce litigation, they can bring new carriers in, they can force competition, and all of that has genuinely happened. What no legislature can do is move a house further from the ocean. The wind risk is a physical fact, and the premium is the price of that fact. So when relief arrives, it arrives as a percentage on top of a bill that geography already set. The inland homeowner and the beachfront homeowner both get their cut. They just start from wildly different places, and they end in wildly different places too. Number 6 is Gainesville in Alachua County, home of the University of Florida. Alachua sits on the sub $2,000 list, with the state's own Office of Insurance Regulation historically pegging the county average for a single-family home under that line. Gainesville is roughly 60 miles from the Atlantic and about the same from the Gulf, which puts it in the sweet spot where windstorm modeling stops being brutal. And here is what makes Gainesville interesting as a buy rather than just a cheap bill. According to Zillow, the typical Gainesville home is worth around $295,000, and values have actually climbed more than 4% over the past year, while much of coastal Florida softened. So you are looking at a market that is holding its value, anchored by a major university, with an insurance bill that will not eat your retirement. Cheap insurance and a rising market do not usually travel together in this state. In Gainesville, they do. The university is the engine underneath that stability. Tens of thousands of jobs, a permanent rental market, and a steady flow of people who need somewhere to live regardless of what the housing cycle is doing on the coast. That is a very different foundation than a town built on retirees and tourists arriving from out of state. And it is why Gainesville held its value while the Gulf Coast gave ground. Number 5 is Leesburg in Lake County, sitting in the rolling lake country of Central Florida. Lake County makes the sub $2,000 list, and the reason is written in its name. This is a county defined by fresh water, not salt water. Those lakes do not generate hurricane-force wind exposure the way an open coastline does, so the windstorm portion of the premium stays modest. Leesburg sits about 65 miles from the Atlantic and roughly 70 from the Gulf, right in the protected interior. What you get is genuine Florida water, living, boating, fishing, lakeside sunsets at a price the coast cannot touch, because the water outside your window is the kind insurance companies do not fear. That distinction, salt versus fresh, is worth thousands of dollars a year, and almost nobody shopping for a Florida home ever thinks about it. And Lake County has a second advantage that rarely gets mentioned. It sits in the corridor between Orlando and Ocala, which means you are within an hour of a major airport, major hospitals, and specialists, while still paying interior insurance rates. For a retiree, that combination, real healthcare access without coastal carrying costs, is close to the ideal. And it is the reason this stretch of Central Florida has quietly filled with retirees for decades. If a town on this list is already making you rethink where in Florida the math actually works, do me a favor and tap the like button, because it genuinely helps push this in front of other buyers before they fall in love with a coastal home and then open the insurance quote. And the towns ahead only get better. Number 4 is Lake City in Columbia County up in north central Florida. Columbia County sits on the sub $2,000 list, and geographically, it is about as insulated as Florida gets. Lake City is roughly 60 miles from the Atlantic and 60 from the Gulf, sitting almost dead center in the northern part of the peninsula where it narrows. It is a quieter, more rural market than the others on this list, and prices reflect that. But for a buyer whose priority is a low total cost of ownership rather than a beach view, this is exactly the profile that works. The insurance bill here is a line item. On the coast, it is the whole conversation. Redfin data shows homes in this part of North Florida selling at prices well below the state median, which means your mortgage, your taxes, and your insurance all scale down together. That is the thing people miss when they only compare sticker prices. In a cheap inland town, every single line of the monthly bill is smaller, not just the one. Number 3 is Ocala in Marion County, the horse country capital in the center of the state. Marion County averages somewhere in the neighborhood of $1,730 a year for a single-family home well under the line. Ocala sits about 70 miles from the Gulf and around 80 from the Atlantic, which is roughly as far from saltwater as you can get in Florida. And Ocala is where the insurance advantage meets a genuine buyer's market. According to Redfin, the median sale price here has eased over the past year to around $275,000, with homes taking roughly 96 days to sell. Read that combination carefully because it is unusual. You have softening prices, meaning real negotiating leverage, plus an insurance bill that is a fraction of the coast. For a retiree running the actual monthly math, Ocala may be the single most rational purchase in the state right now. Consider what that actually looks like month to month. Compare a coastal home carrying a premium in the high thousands against an Ocala home in the mid 1000s, and you have freed up hundreds of dollars every single month permanently for as long as you own the house. That is not a one-time discount. That is a structural difference in your cost of living, and it compounds across every year of a retirement. Number 2 is Macclenny in Baker County, tucked into the northeast corner of Florida, just west of Jacksonville. Baker County averages roughly $1,694 a year, putting it among the very cheapest in the entire state. Macclenny sits about 35 miles inland from the Atlantic, which sounds close until you realize the intervening geography, and the wind modeling works in its favor. This is small-town Florida, quiet, rural, unfashionable, with none of the glamour of the coast. And that is exactly the point. Baker County is cheap to insure precisely because nobody built a resort economy on top of it. The premium reflects the risk, and the risk is low because the ocean is not at the end of the street. For a buyer willing to trade a beach for a budget, this is one of the best trades available in Florida. And Macclenny has one more thing going for it that the pure numbers hide. It sits close enough to Jacksonville that the city's jobs, hospitals, and airport are all within reach, while the insurance rating treats it as the rural interior that it is. You are borrowing the access of a metro area while paying the premium of a small town, which is exactly the kind of arbitrage careful buyers look for. And number 1, the cheapest insurance in the entire state of Florida is The Villages in Sumter County. Stay with me for the last one, because the cheapest insurance in the entire state of Florida is not an obscure town nobody has heard of. It is one of the most famous addresses in American retirement, and once you see why, the whole map finally makes sense. And number 1, the cheapest insurance in the entire state of Florida is The Villages in Sumter County. Sumter County holds the lowest average single-family insurance premium of any county in Florida, at roughly $1,620 a year. And this is not a broker's estimate alone. Florida's own Office of Insurance Regulation, in its official property insurance report, named Sumter County the lowest cost county in the state, and Monroe County, the Keys, the highest. The state itself confirms this ranking. Sumter sits about 75 miles from the Gulf and roughly the same from the Atlantic near the geographic center of the peninsula. It is, in insurance terms, the safest ground in Florida. And of course, Sumter County is home to The Villages, the largest retirement community in America, a place built entirely around older buyers. Which raises an obvious question. Did they choose that spot on purpose? Whether by design or by luck, the result is the same. Hundreds of thousands of retirees live in the one Florida county where the wind risk, and therefore the insurance bill, is at its statewide minimum. When you hear that Florida insurance averages many thousands of dollars, remember that the most popular retirement destination in the state pays a fraction of it, and the only reason is a map. And that fact reframes the entire Florida insurance conversation. The story you have been told is that Florida has become unaffordable to insure. The truer story is that coastal Florida has become unaffordable to insure, and that hundreds of thousands of people already figured this out and quietly moved to the middle of the state, where the bill never got out of hand in the first place. So there they are, 6 towns, 1 rule underneath all of them. Before I give you the honest truth about these numbers, and there are some real caveats you need, there is one resource worth knowing about if any of these towns is on your radar. I keep everything in one place, a single breakdown of 40 Florida towns, 20 that are genuinely worth buying into right now, and 20 worth staying well away from, each one with the specific reason attached, including the insurance and cost of ownership math we have just walked through. If you want to see which side of that line a town falls on before you ever make an offer, the link is waiting in the description. But stay right here, because the honest truth about these premiums, and the one number you must check before you trust any of them, is the most important thing you will take away from this video. Here is that honest truth, and it matters because your trust is worth more than a clean story. 3 things you need to know. First, every figure I gave you is a county average, not a quote on a specific house. Your actual premium depends on your roof age, your construction year, your deductible, and your wind mitigation credits. A 20-year-old roof in Sumter County can cost more to insure than a brand new home 2 counties over. Treat these numbers as the geography of the market, not as a promise on a specific address. Second, those averages are calculated on roughly $300,000 of dwelling coverage. That matters enormously because insurance scales with what it costs to rebuild. Insure a $500,000 home in that same cheap county, and you are looking at something closer to $2,700 above our headline. The under $2,000 number is real, but it is tied to a modest home, not a mansion. And third, the most important caveat of all, cheap insurance does not automatically mean a great investment. Sumter County is the perfect example. It has the lowest premiums in Florida, and yet home values there have eased about 4% over the past year, according to Zillow. The Villages is a large, mature, heavily built-out market, and prices there move on their own supply and demand, not on the insurance bill. So do not confuse a low carrying cost with guaranteed appreciation. They are 2 entirely different questions, and a smart buyer asks both. What a low premium buys you is not a windfall, it is predictability, which for a retiree on a fixed income may be worth more than appreciation anyway. A home that appreciates 8% while quietly costing you an extra $600 a month to hold is not obviously the better deal, especially if you never intend to sell it. The coastal buyer is betting on the price. The inland buyer is buying the piece of a bill that will not surprise them. So, what is the rule? Here it is, and you can use it tomorrow. Roughly 60 miles inland is the line. Get about 60 miles or more from open saltwater in the north-central interior of the peninsula, and the windstorm portion of your premium falls away far enough that the whole bill drops under $2,000 on a modest home. Every single town on this list clears that bar. Every county with a premium in the double-digit thousands sits on or near the water. There is not one exception in either direction, which is what tells you this is a rule and not a coincidence. That is the entire pattern, and it has held through every reform, every rate cut, and every hurricane season because it is not a policy. It is a map. And here is the part that should genuinely encourage you. The relief that is arriving right now, the 8.7% citizens cut, the private carriers filing decreases, the new companies entering the market, all of it lands on top of these already low inland premiums too. The cheapest places in Florida are getting cheaper. That is a real positive story, and it is the one nobody is telling you. Because good news about the interior of Florida does not sell as many headlines as fear about the coast. But before you write an offer anywhere in this state, do the one thing almost nobody does. Get an actual insurance quote on the specific address before you sign the contract, not after. That single step separates the buyers who thrive here from the ones who get blindsided. Now, I genuinely want to hear from you because the comments on these are always the sharpest part. What are you actually paying for homeowners insurance right now? And where in Florida are you? Drop your county and your number below. Because someone scrolling right now is trying to decide between a coastal town and an inland one, and your real bill will tell them more than any chart could. And if this helped you see where the math in Florida still works, hit the like button and subscribe, because these rates are moving for the first time in years, and I would rather you hear the next shift from me than find out at renewal. Because that is exactly what is coming next. If 60 miles inland is the line that decides your insurance bill, then there is a whole tier of Florida towns sitting just on the right side of it, still affordable, still quiet, that almost nobody outside the state has discovered yet. So stay with this channel and we will name the inland Florida towns where the total cost of ownership is lowest in the entire state, before the rest of the country figures out where they are.